In today's rapidly evolving financial landscape, cryptocurrencies are at the forefront of global discussions. Ethereum's institutional adoption leads the way, while Bitcoin's ETF dynamics create tension in the market. Here are today's top 10 stories you need to know. Cardano has been making headlines due to ongoing governance disputes within its community. A recent conflict has arisen over the direction of the network, reflecting deeper issues surrounding governance and user engagement. Cardano has historically attracted a dedicated group of supporters focused on decentralized governance, which can lead to both progress and contention. Despite the turmoil, Cardano achieved a significant milestone in its ecosystem development, showcasing its resilience. This dual narrative underscores the challenges and successes inherent in community-driven projects. The developments could impact investor sentiment, as governance issues often raise questions about a project's future stability. As the community seeks resolution, the situation serves as a reminder of the complexities involved in decentralized governance. Looking ahead, the Cardano community will need to find common ground to move forward effectively. The U.S. Securities and Exchange Commission, or SEC, is facing a critical deadline for numerous pending crypto ETF applications. Set for March 27, 2026, this deadline is creating significant anticipation in the market. Approval or denial of these ETFs could dramatically alter liquidity access for various cryptocurrencies. Historically, markets tend to react ahead of such regulatory decisions, often front-running potential outcomes. This creates a heightened sense of speculation, particularly around altcoins such as Solana, XRP, and Cardano. The atmosphere is becoming increasingly constructively bullish as traders begin to view ETF approval risks as potential catalysts. The outcome of these applications could usher in a new era of legitimacy and liquidity for the crypto market. As the deadline approaches, investors are keenly watching regulatory developments. XRP has recently regained the spotlight due to multiple factors, including its pending spot ETF application and ongoing legal clarity surrounding Ripple. This renewed focus has shifted XRP's perception from a speculative asset to one with potential as a payment and treasury infrastructure. Historically, XRP has faced significant regulatory scrutiny, which has hampered its growth and adoption. However, the recent legal developments have provided a clearer path for institutional investors. Reports indicate that companies are increasingly considering holding XRP for yield generation, reflecting a shift in corporate treasury strategies towards digital assets. This evolving narrative not only enhances XRP's market positioning, but also suggests a broader acceptance of cryptocurrencies in traditional finance. As traders anticipate positive regulatory outcomes, XRP's appeal may strengthen further. With upcoming decisions regarding the ETF application, XRP could solidify its role in the financial landscape, potentially transforming how corporations manage liquidity and investment strategies in the digital age. Solana is increasingly being recognized as a strong candidate for institutional ETF products, with discussions surrounding a potential spot Solana ETF gaining significant traction. This shift is largely attributed to Solana's impressive transaction throughput, which allows for rapid trading and high-frequency applications. Additionally, the upcoming Alpenglow upgrade is set to enhance transaction finality and improve data propagation, further solidifying Solana's position in the competitive crypto landscape. The anticipation of Solana ETFs reflects a broader trend of growing institutional investments in cryptocurrencies as financial entities seek more diversified portfolios. The SEC's evolving stance on altcoin ETFs could position Solana as a major beneficiary, potentially attracting substantial capital. Investor sentiment is currently very bullish, indicating confidence in Solana's future performance. As Solana continues to innovate and adapt to market demands, its role in the institutional investment sphere is poised to expand significantly. With these developments, Solana may emerge as a leading player in the ETF space, reshaping the future of digital asset investments. Bitcoin has recently faced significant ETF outflows amounting to $1.26 billion, which has raised alarms among investors and market analysts alike. Exchange-traded funds, or ETFs, are crucial vehicles for institutional investment in cryptocurrencies, and such outflows can signal waning confidence. Historically, these trends have led to immediate market pressure, often resulting in price declines. However, some experts argue that these outflows may reflect local exhaustion in the market rather than a full-scale collapse. If buyers can effectively absorb this selling pressure, it may create a unique opportunity for contrarian investors to accumulate Bitcoin at lower prices. The implications of these outflows extend beyond Bitcoin itself, as the cryptocurrency market often moves in tandem. As Bitcoin remains a cornerstone of the crypto ecosystem, its price trends can impact altcoins and investor sentiment broadly. Looking ahead, the market will be keenly focused on the ability of buyers to stabilize prices, which could determine Bitcoin's trajectory in the coming weeks. Ethereum has emerged as a focal point of institutional interest, largely driven by strong ETF inflows totaling approximately $1.25 billion over the past 18 days. This remarkable surge indicates that Ethereum is being perceived less as a speculative asset and more as a core component of institutional portfolios. Historically, Ethereum has faced skepticism from traditional investors due to its volatility. However, recent developments suggest a shift in perception. The implications of sustained inflows could create a self-reinforcing cycle characterized by tighter supply and stronger price action. Additionally, Ethereum's role as the primary platform for smart contracts positions it favorably for investors seeking exposure to on-chain activities without the risks associated with less established chains. The growing institutional interest has bolstered market confidence, leading to an overwhelmingly bullish sentiment among traders. As Ethereum continues to gain traction, its structural accumulation phase may redefine its standing in the crypto market. Looking ahead, the anticipated launch of new decentralized finance projects could further accelerate institutional adoption, solidifying Ethereum's position as a leading digital asset. The ongoing discussions surrounding cryptocurrency regulations have begun to positively influence investor confidence across the market. As the U.S. Securities and Exchange Commission, or SEC, considers a range of applications for cryptocurrency exchange-traded funds, the outcome of these deliberations is crucial. Regulatory clarity is emerging as a pivotal factor that could significantly impact various digital assets. Historically, uncertainty around regulations has stifled innovation and deterred mainstream adoption. However, the prospect of crypto ETFs receiving approval has traders viewing these developments as potential catalysts for growth. This anticipation is fostering a constructively bullish atmosphere, leading to expectations of a broader altcoin season. Increased liquidity and market legitimacy are likely outcomes, particularly for assets that establish clear regulatory pathways. As the deadline for ETF applications approaches, market participants are bracing for significant reactions based on the SEC's decisions. Investors are closely monitoring these developments to gauge their implications for the future of cryptocurrency. If the SEC approves these ETFs, it could mark a transformative moment for the industry, paving the way for expanded institutional investment. The cryptocurrency market is witnessing a significant shift as institutional accumulation becomes a defining trend. Recent data reveal that major financial institutions are increasingly allocating resources to digital assets, with Ethereum leading the charge. This inflow of institutional capital is reshaping the dynamics of how cryptocurrencies are perceived and traded. Notably, Ethereum has experienced a remarkable surge in exchange-traded fund (ETF) inflows, establishing it as a core asset for many institutional investors. Historically, cryptocurrencies have been viewed as speculative investments, but this growing institutional interest is fostering a new paradigm characterized by increased stability and mainstream acceptance. Enhanced liquidity and reduced volatility are anticipated as institutions continue to enter the market. The presence of institutional players is likely to drive price movements and influence overall market sentiment, creating a more mature and robust crypto environment. Investors are closely monitoring these developments, as they could signify a long-term shift in the cryptocurrency landscape. Looking ahead, the sustained commitment of institutional capital may pave the way for innovative financial products, further integrating cryptocurrencies into traditional investment portfolios. Market volatility persists amid uncertainty, with recent fluctuations in the cryptocurrency landscape causing significant concern among investors. While certain segments, such as Bitcoin and Ethereum, have shown bullish trends, the overall atmosphere remains unpredictable. This uncertainty is largely fueled by ongoing regulatory developments across various countries as governments grapple with how to approach digital currencies. These regulatory frameworks can drastically influence market sentiment, leading to rapid shifts in asset values. Historical analysis indicates that volatility can create both risks and opportunities. Thus, investors must remain vigilant. The current market dynamics suggest that while some cryptocurrencies may experience growth, others could face substantial declines, affecting portfolios worldwide. Furthermore, the psychological aspect of trading plays a critical role, as fear and greed often dictate investor behavior during turbulent times. With this in mind, traders are adjusting their strategies, employing tools like stop-loss orders and diversification to mitigate risks. As we look ahead, understanding the factors that drive volatility, such as technological advancements and regulatory clarity, will be essential. Investors who remain informed and adaptable are likely to find opportunities amid the chaos, positioning themselves for potential gains in this ever-evolving market landscape. The coming months will be pivotal in determining the direction of cryptocurrency investments. Ethereum continues to solidify its position as the central figure in the cryptocurrency market, driven by remarkable institutional interest and strong ETF inflows. Recent data indicates that Ethereum has recorded an astonishing $1.25 billion in inflows over the past 18 days, marking a significant shift in how institutional investors view this asset. This surge in investment comes as institutions increasingly recognize Ethereum's potential, particularly its smart contract capabilities, which facilitate decentralized applications and financial transactions. The sustained demand highlights Ethereum's transition from a speculative investment to a staple in many portfolios, as investors seek exposure to its innovative technology without the risks associated with lesser-known cryptocurrencies. The implications of this trend are profound, as it could usher in a period of increased stability and maturity within the crypto market. A stronger Ethereum could lead to reduced volatility, attracting more conservative investors who may have previously shied away from digital assets. As Ethereum's dominance grows, it becomes a leading indicator for overall market sentiment, influencing trading strategies across various assets. This evolving landscape underscores the importance of recognizing Ethereum's role as a foundational asset in the crypto ecosystem. Looking ahead, Ethereum's upcoming network upgrades and regulatory developments will be crucial in determining its trajectory and, consequently, the broader market direction for cryptocurrencies. Investors will need to stay vigilant as these factors unfold. Thank you for tuning in to today's top stories. Which of these developments surprised you the most? Don't forget to like and subscribe for more updates.